Welcome back to Super Entrepreneurs Podcast. I'm your host, Shahid Durrani. Today we have with us Sean Tepper. Hopefully I pronounced it correctly. Sean, correct. Is that right?
That is correct.
All right. So Sean Tepper with us today. Thank you so much for joining us, Sean.
Shahid, thank you for the invite. Appreciate it.
No worries. Not at all. So before TYKR, now did I pronounce that correctly? TYKR. That's
you did like a ticker symbol in the stock market.
Yeah, it goes with that. Well, first I want to ask you, when you were looking for a name, because of all the patents out there, it's just really hard to get anything that is closer to what your vision was. Is there a story behind the spelling of TYKR and how you came up with it to get away with that, I guess?
Yeah, you were one of the first people to ask that, actually, out of 5 years in business now. But when I was creating the tool for TYKR, the first version was in Excel, started around 2015 or 16, and used it the next 4 or 5 years on my own just to prove that it works. But I had a working title, which wasn't very good. And a key metric within analyzing stocks is margin of safety. So I called it margin of safety engine. But I knew from a marketing standpoint that you look at like Google, Uber, Tesla, Facebook, it's very common to have 2 syllables if you're creating a tech startup. So I'm like, all right, I need something that relates to the stock market. Looked up TYKR, TYKR. Obviously, that's taken.
Nope. Yeah.
Right. So that's not an option. Yeah. And I had a list of like names in Excel, and I had to look them up, see if they're available, and did secure the .pro for TYKR, which is how we're spelled. And I was surprised. I'm like, all right, I'll take the .pro, ran with it for like a year or two. And then a broker on GoDaddy came to us and said, hey, you can get the .com for 50 grand. And I managed to negotiate down to close to 20 grand for the .com. Yeah. So now the domain, of course, is valued at a much, much higher price, but that was a bit of a journey to arrive at TYKR.com.
Yeah. I'm just curious, right? Because that's part of the journey, and starting something is the name. And we all want the name that kind of rhymes as close as possible to what we're selling or servicing. But usually they're taken, there's some kind of patent out there. So, yeah. So before, TYKR was ever around, what was that exact moment you realized that, most people are not kind of, they're not really incredibly bad at investing, but they're just feeling extremely overwhelmed. And that's why you came up with this solution.
Yeah, that's exactly why. And there was an aha moment. So, and I'll share with that, and I won't bore you to death here with a long story, but I'll kind of keep it short. But I started investing around 2010 or 11. And just before that point, I was building a business. It was just an agency, doing marketing, building websites, some custom software for small and mid-sized businesses. And that was not a scalable business. And fortunately, we did we merged with a larger company, a larger agency in 2010. And there was like no check written. It wasn't like, hey, here's $1 million. You can do what you want. It was none of that. I mean, a service business is very, very hard to sell. So in our case, it was literally just wiping out debts and liabilities, and I got a fresh start. But then I got into the stock market because I'm like, how do I flip the equation? Instead of me working for money, how do I get money working for me? And I'm like, well, the stock market seems to be a great place where a lot of people are making a lot of money. And unfortunately, a lot of the tools out there I was joining, they don't give you a definitive decision to buy or sell a stock. It's very hard to make decisions in the stock markets. And I kind of like looked at social media, followed a few people. I made some money, lost some money over like the course of 5 years. And I'm like, this is not sustainable. I'm going to make a mistake and lose a lot of money. So I have to take a step back, do this a little smarter. So I started looking at Warren Buffett and Charlie Munger, and I knew at the time that those guys were able to consistently beat the market. And I'm like, that's what I want. But at the same time, I knew that these are not, and you probably agree, these are not gambling men. They don't use feelings or emotions to pick stocks, which means they're probably starting with some sort of math. And my background is about 20 years in tech. I worked a lot in manufacturing here in Wisconsin. A lot of the companies, or a few of the companies I worked for, include GE and Kohler. And one thing in process engineering that's really important and how it ties to what TYKR does, which is simplifying complexity. I'll give you an example here. Like if you're going to market or you're reporting to an executive and you have like 100 data points, you can't do that. You have to roll it up to something that's easy to understand. So ideally a yes or no or traffic light. And I was asking the question around 2015, like, hey, I can't be the only person complaining about the fact that nobody's using a traffic light rating system for picking stocks. Apparently I was. And I'm like, well, that's where the need is. Like somebody has to do something about this and take a process engineering lens and layer it over finance to make it easier to understand. Manufacturing, people can look at from the outside and be like, oh, it's boring, it's manufacturing. It's like, well, there's a lot of principles you can apply to a lot of other businesses. But anyway, at that same time, I figured out the math that Warren Buffett and Charlie Munger were using to pick stocks. And a guy that helped kind of point me in this direction is Phil Town. Your audience can look him up, but he wrote a few good books. One is titled Rule One. The other one is titled Payback Time. He has a third book titled Invested. I did not read. He wrote it with his daughter, Danielle. I'm sure it's great, but he provided a lot of calculus in those books. So I took that, put it into Excel, and then created the traffic light rating system. I did a few iterations on this over 4 or 5 years, but essentially made returns that were ranging between 15 and 50% per year. And I'm like, all right, I think I've got something here. I've tested it long enough for like, again, 4 or 5 years. This brings us to about 2019. I started sharing this Excel sheet with a few other people, and everybody's like, hey, you should turn this into a software. And that was the green light, you could say, to move forward building the software. It took a year to build the MVP, went live in 20, and then fast forward to today, we just crossed over 13,000 customers in about 50 countries. But the key, there's a lot of tools in TYKR, but the key thing is the main rating system is literally a traffic light. It is green, gray, or red. And the nomenclature is on sale, watch, or overpriced. And most stocks hit overpriced. So those green stocks are actually very rare. But yeah, our customers get this to date. The average annual returns over the last 5 years for the S&P 500 is somewhere around 10 to 12%. The TYKR community, 18%.
Oh.
Even though the returns are really good, the thing that our customer, and I'll stop talking here in a second, the thing that people care about most boils down to one word, and that is confidence. Like the home run feeling that people are looking for is to confidently buy and sell stocks on their own. If they can do that, they sleep better at night.
And someone actually taking the lead and doing the research and providing that green light or red light is what a lot of them, we're all looking for that, right? But nobody actually takes a lead on that. So by you doing this, are there any liabilities on your end for giving a recommendation, or do you have like some kind of a disclaimer, that I'm saying green, but this could be off?
Yeah, good question. So, and I'll won't talk your ear off on this, but with our nomenclature, it's all about valuing the businesses. We don't actually say buy, hold, or sell. So it's on sale, watch, overpriced, which is similar to some of our competitors. They don't use the same nomenclature, but and there are a few businesses, I'm surprised by this, that do get away with a buy, hold, and sell, which I don't recommend doing. What we do is we look at the valuation of the businesses by analyzing the financial statements. So there's no technical analysis, which is looking at charts. We look at that income statement, cash flow statement, and balance sheet. But I'll say one more thing here is with our business model, we're providing analytics and education. Essentially, our business model, you could call it an analytics tool or a screener. We work very well with brokers. We're not a replacement for a broker, because you still need a broker like Robinhood, or you're in Canada, so you probably have Questrade, and Interactive Brokers is available in Canada as well. But that's where you buy and sell, that's where you connect your bank account, buy and sell stocks. You need a education layer, another platform, which that's where we come in. But we fall into what's called the publisher exclusion category with the SEC. And there's 3 rules that you have to obey in order to maintain your position in that category. And rule number 1 is all data you provide must be factual. It can't be like emotions driven, like, hey, I like this CEO, so I think the share price is going to $2,000. Like, that's
he has nice
ridiculous
hair.
statement. Right. Like, you can't do anything like that. Number 2 is we can't ask you your age, your risk level, your retirement goals, because that all relates to personalized financial advice. So we can't do that. And that's really easy to follow. And the third one is even easier to follow, which is all information we put out must be regular. And what that means is it's like you got to be sending it out daily. You can't do something like, hey, you need to go buy as much of GameStop by Wednesday. And then on the very next day.
Okay.
Yeah. And then on the next day, I sell as much of GameStop behind the scenes without telling anybody. That's called a pump and dump. And that is actually... Talking to the SEC, there are a lot of people on these Discord groups and WhatsApp groups that do a ton of that. Right. So following those 3 rules are actually very easy to do if you're ethical. If you're looking for a quick buck and want to make money from a bunch of people in short order, you're going to get into gray areas with those 3 rules. But publisher exclusion is where we sit. So I'll say one more thing here. We didn't have to do this, but I wanted to do this. I actually had an audit done on our own business. Like, who pays a law firm to do an audit on their own company? Like, super rare, but I'm like, I want to go a step further, because I wanted a PDF output that proves that, yes, we are publisher exclusion. It's not certified, but like, we passed with flying colors. So it's one of those deals that with our partners, they really like the fact that we went the extra mile to have an audit done. Because I've done audits at, or have been part of audits at, like GE, and not a fun experience. Not at all.
Yeah. No, this is great that you're providing this, and obviously to allow, at times to do an audit, but you can also be forced to do an audit. But you actually went ahead and kind of looked at it from a different viewpoint to make sure everything is good. So that actually gives consumers more a relaxed feeling, right? So for me to understand fully, and apologies, I should have looked more deeply into your platform before speaking to you. But
no, that's fine.
So does a platform recommend top 5, top 10 kind of situations, what people should invest in? Not should, meaning this is what we have right now. This is what we see. This is what we analyze. This is the data. And this is what we're thinking as a green light. You know what I mean? So is that how it works?
Yeah, you can search for stocks in multiple ways. One is you can type in a search bar. You could look up everything from like Microsoft to, Palantir to NVIDIA, whatever you want, because we've got close to 60,000 stocks around the world. And we've got a lot of customers in other countries. So we needed to have stocks around the world. What you can also do is we got a screener tool. And what that means is think of it like a Excel sheet on steroids, but it's a huge list, and you can add filters to it. Like, let's say I only want to see on sale stocks located in Canada. And it's going to take that 60,000 and compress it down to a very small list, because only a few stocks make it to on sale. So you can kind of filter. And then we have a few other ratings in there that create layers of confidence. For example, we've got a feature called the 4M Confidence Booster, and that's powered by AI. Essentially, it reduces hours, if not days of research down to seconds. Puts it on a rating between 0 and 100. And if you can get over 80 on a stock, that is really hard to do. That's a really strong stock. Yeah, I'll give you the 4M's here because I'm sure your audience will be wondering what the heck do the 4M's mean. But the first M is the math part. We do that all automatically in TYKR. That's that rating system inspired by the traffic light. The second M is the meaning. The meaning of a business is the business model. How does it make money? How many revenue streams does a business have? A really good business has multiple revenue streams. The third M is the moat. That's how that business compares to other businesses in the same sector and industry. And then the last M is the track record of the management of your CEO. And we use OpenAI to kind of simplify it for our customers, but it does everything in seconds. And you can even log in. You don't even have to go through the 4M experience. You can see the average ratings of customers of the past. So you could kind of going where you're going, you could search by, let's say, Canada stocks on sale, 4M score of 80. And now you're going to create an even shorter list. And then we have a rating, which we call the 7. It's like the 7 key steps to pick a good stock. And you want to look for stocks between like a score of 5, 6, or 7, like somewhere in there, like a 5, 6, or 7. Get this. I did a search here recently in TYKR. Out of the 60,000 stocks in the platform, I'm going to have you take a guess. How many of them achieve a score of 7 out of 7? This is very rigorous rating. Kind of rolls up everything in the tool to one easy to understand score. But take a guess here. How many stocks out of 60,000 make it to 7 out of 7?
It has to be low than my, if I'm thinking common sense. So maybe I would say 10%.
Final answer?
Yes.
Okay. So only about 20 stocks make it to, out of 60,000, make it to.
Oh, wow. So I was initially saying that's under 1%. And I said, wait a minute, maybe there's more. It's way under 1%. So if you want to find like the top 0.001% or whatever that number is, you want to use the 7 feature because that rolls up the traffic light rating system, the 4M score powered by AI, and a few other things as well. But it's in a super easy to visualize interface, like with green check boxes or red X's. But so a lot of customers now, like if they want to look for stocks, they just use the 7 and you arrive there pretty quick. But you can filter on that. So this even sounds like it simplifies the amount of time you need weekly being part of TYKR on average.
One thing that I give credit to, Phil Town, I give him a lot of credit because he's kind of my mentor in this experience, along with Warren Buffett and the late Charlie Munger. But like the thing that Phil Town really stresses, and we also do as well, is you really only need about 15 minutes per week, not per day. It's per week, and you can do very well in the market. That's good. It's incredible. Yeah,
that's good. Yeah, because the learning curve and whatnot, it decreases so much when we work with a platform like that. I'm gonna actually check it out. So, what did your first version? When you were launching TYKR, when you were putting the features together, what was the first version of TYKR that you intentionally left out? Were there any kind of features that you left out intentionally in the beginning, even though people were saying that, to include it? Was there anything like that?
Well, I thought coming out of gates, just the rating system plus a watch list feature where you can add stocks to your watch list. And when changes on those ratings happen, you automatically get an email. And people love that because TYKR is doing the monitoring for you. Yeah. Well, that wasn't good enough. Like there are people that were missing this ratio and this, like we do have a lot of ratios, even though we don't include it really in our decision-making process, but people wanted to see like PDE ratio and PEG ratio and price to book ratio and all these ratios. They also wanted, alerts they can set on whatever stocks they want. They wanted better filtering. It's like our version today is the version we're going to keep it probably into perpetuity or as long as the platform is alive until we get acquired or whatever happens. But the first version was bad. It was really? Looking at DOT. Yeah, it was. I had to kind of scrape by with one engineer. And long story short there, I went through 3 firms because I've got a long background of managing people all over the world, when it comes to software engineering. And building a SaaS is actually very hard. Most people cannot execute because there's so many little nuances to think about with upgrading, downgrading, pricing, email triggers. And the first two firms I worked with in the past, building websites, but building a SaaS, impossible for them. They could not do it. The third guy, I was able to barely get a SaaS live, but it was garbage. Like, and that's the thing is, like, as an entrepreneur, you got to accept the fact that it's not going to be perfect. Like, it'll never be perfect. So it came out of the gates, right? And then it took about a year and a half to get to V2, which I had the wrong people in the company. We could talk about people all day, like hiring the right people, but they picked a framework that limited us on what features we could add, and we had to scrap that. And then it took another year to get to phase or version 3. So I look at, like, there's probably a good year in there that was wasted. I was just upset.
Initially, the stack that you're picking initially could harm you even years down the road, right?
Oh, seriously. Like, we did not have those first 2 versions. It probably took 3 years to get to version 3 out of 5 that we've been in business.
Because of that.
Right. Exactly. And it takes a long time. Like, if you look at the history, like Duolingo took 5 years, I believe, do my homework, 5 years to reach monetization, start making money. Figma took 3 years, like, to build a quality SaaS product or a tech stack. It takes a really long time, especially if you're bootstrapping, and that's essentially our journey.
For sure. Yeah. Well, congratulations to you, man. You're like, you're the inspiration for entrepreneurship communities all over the world, because you did it. You took the step and you made it happen, no matter how. You got it done, but you got it done. So kudos to you. Was there a point where TYKR wasn't growing? Like, you weren't seeing any momentum or any movement, and you had to decide whether simply push harder or chase some growth tactics or hire more consultants. Was there anything in the journey that you had to go through for that?
There were circumstances probably in the first 4 years. I'm like, I literally was asking myself the question, should I be doing this? Like, I am not getting any traction here. It's taking forever to build the tech. And I kept going back to, our customers, the ones that would use it, would leave raving reviews. And that was like a good reminder.
Keep going.
And there's rules about not quitting. Like, I'm very open to this. I'm not very preachy, but I am a Christian, and I do follow a lot of biblical principles. There's one, Galatians 6:9, which is, do not become weary in doing good, because at the right time you'll reap a harvest if you do not give up. And there's other verses like that. But
right. You're helping people.
I'm like, this is providing value. This is solving problems. We got happy customers on it. Always revert back to that verse and be like, it's pretty much telling me not to quit. And that's a common thread. Like, and I've talked to so many entrepreneurs that have built their businesses to, 7, 8, 9 figures. And the key thread was like, just outlast our competitors, or just don't give up. And I'm like, it just ties back to the biblical principle of, like, if you're providing value and solving a problem, do not quit. So
that's great that you didn't quit. So you that's wonderful, because it happens, in the journey, especially when people that we have around us may pressure us to kind of shift that vision, but you only know, as the individual who has the vision, the power of that vision, right? And what they hold. That person, the person that's starting this idea, they're the only ones that know, and you just knew internally, and you just went for it, and that's wonderful. You grew TYKR to users all over the world. Well, actually, at least 50 countries, right? Without VC. Can you share any pressure that bootstrapping was making you face that VCs, sometimes obviously hide?
So I'll give you the end of the story here is we have raised capital, but all from angels. And I can talk about VCs here in a little bit because we do have some experience in that arena. But I wanted to bootstrap as long as possible to, as I use the phrase, maintaining the high ground. And because if you come out of the gates with an idea, with something that's not generating revenue, you're going to give up somewhere between 10 and 20% of your equity immediately from VCs, and they're going to devalue your business significantly. So I actually kept my day job at Kohler for 3 years. It was actually closer to 3.5 years. So just worked on TYKR part-time, keeping my engineering moving. Didn't take a paycheck those first 3 years, a small paycheck in year 4, even year 5, because still kind of bootstrap mode. But we did use some other channel partners to start building up the audience. That's the key thing. Is a lot of my experience with big businesses, channel partners, was essentially partnering with other businesses that have a much larger audience, and then whatever customers they send to us, you give them a rev share. So we do 30% is kind of our going rate. It exactly. Like for example, at Kohler, I did a lot of work with channel partners like Costco and Home Depot. Like, you want to move a lot of product, you partner with some big retailers, you can make a lot of money in one day. So it's taken a long time to get some bigger channel partners, but now we're starting to secure some massive channel partners. But some of the most popular brokers around the world we're now partnered with. But again, it took 5 years to get there. But through channel partners is how we are able to get customers all over Europe. We've got customers in Africa, Australia, New Zealand. Yeah. So that's, the quick hack here for entrepreneurs is so many people immediately go to like paid ads. We have not in 5 years. We've never run a paid ad because channel partners are significantly more lucrative than paid ads. Paid ads, I only recommend if you've got significant free cash hitting your cash flow statement.
Significant is a key word.
Yes. Then put it into paid ads. Or like we're raising more capital here, and I decided to say no to a lot of VCs. The reason is, even to date, VCs they'll devalue our business, whereas angels are like, yeah, just grow your business. Like, we want to be part of it. Just go. So I recommend start with angels, individual investors. They could be, entrepreneurs. They could be retirees. They could be doctors, people that inherited capital. It's like, that's who you want backing her, because VCs, again, they want to take our valuation and cut it in half. And then they're like, then we'll invest. Oh, and then we're going to try to control your board as well. Like, no, I'm going to maintain the high ground.
No, definitely a good decision. Paid ads, I think, is once you have something that's proven, you want to test it and then put fire on it. And like you said, significant investment, but collaborations, working with other companies is a lifesaver. Like, for me, I spent years spending money. I didn't learn this lesson with paid ads. I learned it after years of spending, right? That, putting 10 grand here, 5 grand here, 20 grand, you know what I mean? Doing that kind of investment is not going to get you far. I feel, you kind of end up where you started, depending on the product, I guess, of the service. But unless you have really, really deep pockets to kind of go all in with it, then of course the data will scream, right? It'll give you the answers. But collaboration, I find that is so much easier and simpler. And it's about that human nature, working together with other people to grow. That energy is phenomenal.
You're 100% spot on. Like, we're here to work with others, provide value to others, but also collaborate with others. And it's like, you find other businesses they're not really your competitor. If they are, that's okay. But other businesses that serve your audience, you work together to serve. And that's how you build a business. That's how you scale a business significantly.
It's really like even this show, right? Like guests like yourself coming on here, and then you're agreeing to help promote the episode on your network when you book the call. The whole process is about collaboration, relationship, and then we'll work together once it goes live. Then you're going to be sharing on your network, tagging us. We're going to be sharing and tagging you. Algorithms see that. This is just one example of collaboration. And it happens having that open conversation in the beginning. And I find it so much more powerful, because the people that you bring on are people on both sides, right? People that enjoy or like what I'm doing. They'll see, okay, you know what? These guys hit it off. And then they start seeing what you're doing. And then hey, let's just try it out. There's that relationship that keeps adding and amplifying every step of the way,
Yeah. 100%. Yeah.
Yeah. That's great. So can you share what are some emotional mistakes that new investors make? And if there's anything that you could share how TYKR is protecting them, by signing up with TYKR is protecting those emotional mistakes that many new investors make. Any features like that?
Absolutely. So that's really like finding the right stocks in the first place. That's our rating system.
Yeah.
We're focused on it. And I'll give you a few disciplines here, but we'll start with the questions that our customers ask most, because your audience may be asking the same questions, which are, where do I start? When do I buy? When do I sell? Like those three questions are on repeat the great majority of the time. And where to start is really simple. Like when you join TYKR, we've got a 14-day free trial, and I'll be transparent here with our pricing. And our pricing is set up like Netflix. So depending where you're at in the world, based on your IP address, the pricings will be different for TYKR. So Netflix is like best in class with that model. We copied them. So in the US, the prices are like $15 a month or $99 a year. That's our premium plan. It's very easy to get in for most people, no matter what your income is. And then our quick onboarding is like 60 seconds. And then we have a checklist, because the best way, if you are creating a SaaS business, add a checklist feature to let people know, if you complete this checklist, here's what you can expect. Not guarantee, but expect. And we tell our customers that if you can complete the checklist in 14 days or less, you're going to be buying and selling stocks with confidence. It's pretty easy.
That's great.
I think it's like 7 easy steps. Like, and this is key. Pay attention to this detail, which is when you create a checklist, make like 1 or 2 of the checks already done by default. So letting the customer know they have psychological momentum. Like for example, I think step 1 is join TYKR. So that's checked off. And step 2 is create a watch list, which you did already in the quick 60-second onboarding. So it's like, oh, I've got 2 out of the 6 steps done already. Well,
it's motivating.
It's motivating. And then there's like create a portfolio, sign up for a broker. And you're pretty much there. Like there are people that have said, Sean, I completed my checklist in less than 5 minutes, like 14 days, didn't need it. Yeah. So that is a key step for how to get started. And then what we do is we send a new email tip to our customers every day for like 30 days. And it teaches things like, where do you start? When do you buy? When do you sell? And there's a bunch in there. Like, what if the stock market goes down? What do you do? Like, so, and that's a psychological thing, is people need to realize that, and this is a really key statistic I'll give you and your audience should probably write down, which is over the last 100 years, there have only been about 17 bear markets, recessions with an average duration of 10 months. What that tells us, when the market goes down, there are a lot of people, especially in the news, that are like, the sky is falling. This is the end of the world. And it's just like, no, it's not. Like the market's going to rocket right back up in a week or 2 or in a few months. But again, this has only happened 17 times out of the last 100 years. So we tell our customers, that's exactly what you want to happen, because if the market goes down, and I've got case study upon case study of people turning a little bit of money into a lot of money by not being fearful. Like when the market goes down, deploy your capital, and that's where you make ridiculous returns. Like I got a story here I'll share with you of we share this testimonial all the time. It's a guy, he was pre-TYKR. He is no longer around, but his name is Ronald Reed. You could Google this guy, Ronald Reed. He was a janitor that built up a net worth of $8 million with the stock market. So the question is, how does somebody who's making close to minimum wage become a multimillionaire? The answer, you want to own about 10 stocks. And when the stock market goes down, you want to try to put as much in each time, because the market, again, it doesn't go down for long. It rockets back up. And that's when you turn, like, you can turn $10,000. I'm going to give hypotheticals here. These are not guarantees, but you can turn 10,000 into 50 or 100,000 very quickly, right? Like it's those type of numbers multiply because you're using like a tool like TYKR, which kind of guides you through that process.
That's awesome. That's awesome, Sean. I appreciate you today for coming on the show and sharing what you have been through and what you have created. Again, congratulations, man. And looking forward to what else you're doing. You. And because at the end of the day, you're helping people earn more money. It's another source of income for them. And you made it very easy. You're incorporating AI. Like it just sounds like you're following all the right steps. So it's really exciting. I'm definitely going to be checking it out. Appreciate you. And yeah, definitely stay in touch.
Well, thank you, sir. Appreciate the invite.
You're welcome. Audience, thank you so much. And we'll definitely make sure you subscribe if you're watching the video and, share your viewpoints about this episode. We'd love to hear from you. Thank you.